Early last year, Web3 was the hottest sector to invest in. This blockchain startup was one of the highest funded companies backed by FTX. But then one after the other, a series of bad news hit the crypto industry. Did Mysten Labs feel the tremors of the FTX collapse? Will VCs bring their trust and money into crypto again?
The early stage, kind of money is still there, the valuations being hurt. But once you got to sort of the late Series A and Series B stage, the growth capital is kind of hard to come by and frozen. Has to be exceptional startup to get funded. Unless you're sort of in the bubble of the excitement around generative AI right now, it's going to be a lot harder for any startup to raise money.
Or will they continue to make big bets on their new favorite, AI? Coming up on Word on the Block, Evan Cheng, founder of Mysten Labs, dives deep into those topics and a whole lot more. Well, it's 2023 and the FTX contagion continues to send shockwaves through the ecosystem. Several crypto investment firms filed for bankruptcy after investors pulled out funds, leading crypto exchanges, including Coinbase, Kraken, Bybit, and so many others, laying off employees to cut costs. So how will the future shape up for the industry after the shakeup? Some are calling it the Great Reset for crypto. Will we see stronger, more compliant players emerge? Welcome to Word on the Block, the series that takes a deeper dive into blockchain and all the emerging technologies that shape our world at the intersection of business, politics, and economy. It's what we cover right here on Forkast. I'm Forkast Editor-in-Chief Angie Lau. Well, let's get right to it. We are in conversation with Evan Cheng, founder of Mysten Labs, a company that is building foundational infrastructure to accelerate Web3 adoption. Evan, welcome to Word on the Block.
Well, thanks for having me.
We've been hearing all about this project, a lot of fanfare and a lot of investors coming in to Mysten Labs. And then I guess the rug got pulled out from all of us. What was that experience like over the past couple of months? And as you were starting to really try to get some traction for Mysten?
Well, so the FTX situation is unfortunate, right? There's a lot of noise around it. There's a lot of questions, concerns around it. We're, financially not impacted, right? All the 300 raised in Series B is in essentially cash or cash equivalent in the banks, very safe. Where a company is more senior, right? We know what we want to do. We'd never expect to rely much on our investor partner to kind of deliver critical, kind of needs. Like listing. So while it's unfortunate we lost would be a great partner in FTX, essentially, we're really not that impacted apart from all the noise, we're getting everywhere. But yeah, we're marching forward.
There was really, I would say, greater interest in the industry. The conversations I heard around how blockchain technology can solve real world problems, talking with experts and investors and policymakers discussing topics like sustainable growth and trust and transparency. And it really felt like the conversation shifted back to what a lot of us in the industry are focusing on, which is the technology.
That's right. I think the promise has always been there. Everybody who has kind of either a fan or student of the industry, or people who are open-minded about the coming disruption has always been kind of aware of the opportunity blockchain technology can bring to financial systems, to even consumer products. Right? There's a lot of sort of narrative around, while we're building more infrastructure and technology, let's just build products. We're here to prove to everyone, actually, it is the infrastructure, the technology that's holding us back, right? And we're going to be showing more example of that. When you're a lot of limitation at the base layer, there's things that you fundamentally cannot do or finding it very difficult to do. So you're seeing this in the past, right? While all the promise has been there, the last few waves of crypto adoption, so to speak, or the markets were mostly driven by narrative, right? And every time the wave, sort of dissipates, goes away, and people look around and say, well, what has the industry accomplished as a whole? Maybe some proof of concept, what could happen, what could be done, what are the benefits? They really haven't been proven, right? So we've seen this in 2017, the ICO wave. We've seen it again later on with DeFi Summer, and turns out a lot of the utility were driven by sort of these lending products that turn out to be, house and car. And the industry sort of feeds itself and supports itself and just collapses very quickly, right? We're seeing a bit of the NFT collectible as a collectible market as well, right? There were fanfares, a lot of excitement, a lot of people coming in. Then it kind of die off, and then realize there's real progress there. There's some really, really brands, serious brands being established. But at the same time, a lot of volume were just kind of wash trading or speculative activities. A lot of it can be traced back on just how difficult it is to build, product of real utility to deliver real consumer impact. And so it's kind of hard to sustain given that.
Yeah, I could not agree with you more. I think that kind of speculative hype is really what inflated the entire industry, even post Terra Luna crash, when really the industry would have been better served had they been able to react in a transparent way. The data must be true. That data transparency is one thing, but if you don't have the infrastructure and the indexing around it, it's really hard to discern value. That's what we're thinking about on the infrastructure side. I'm curious how you think about that.
Well, we think about infrastructure as, what is the developer needs, right? Ultimately, a blockchain platform like L1 is a developer infrastructure, developer platform. Right, it comes down to what problems are the developer trying to solve, and that goes back to what's the spirit behind Web3? And I think people understand intuitively. You wrap things in the token; they can be easily transferred between parties. It's great for financial product, but Web3 is much more than that, right? It really is about getting the internet back to more fair and open and more peer-to-peer interaction model, right? We will move away from that. If you look at the internet incumbents today, right, by and large, they are built on the work of users, right? User-generated products is the basis behind, Instagram, Facebook, Twitter, YouTube, you name it. What would the next, content sharing website like a YouTube, like an Instagram look like? How can it be more fair, especially fair and open to the creators, so they know exactly, how much their work is worth, right? And do they have the freedoms, the flexibility to sort of utilize their own assets rather than having it being controlled by a centralized third party? So that's the whole point, right? The blockchain basically is going to be this great shared open database, is great, medium for creating assets and controlling assets. And smart contract is supposed to offer a lot of the capability the centralized entity is supposed to offer, right? Custody of your assets, custody of fund, facilitate transactions. With that, then you have a more level playing field, right? Right now, it's so hard to imagine challenging the big guys.
Well, and the big guys have a lot of ammunition with FTX's collapse. I mean, they just kind of point to this space and say, hey, it was all BS. That's gotta hurt, as you try to build up, they ledger round. But as you've said, you're still highly capitalized. But has it hurt the prominent investment pool and the appetite, as we hear that people are starting to migrate from blockchain into AI now?
Yeah, I think what we're seeing in the market today, it is a lot harder for, kind of startup to raise funds in this space and the software industry as well. I think based on my reads, the early stage, kind of money is still there. Just the valuations being hurt. But once you got to sort of the late Series A and Series B stage, the growth capital is kind of hard to come by and frozen. Has to be exceptional startup to get funded, unless you're sort of in the bubble of the excitement around generative AI right now, it's going to be a lot harder for any startup to raise money. But we're fortunate. One of our job as a platform is to help builders, with the problems, right? It's one thing. What a builder building for, right? Well, one, they're building great product to service consumer, but ultimately they need to make money, make a living. They need to, sort of gain their form, kind of the reputation, right, for creating something that lasts, right? So for us, it's about helping them build the best product as well as help them build a lasting business. And the capital aspect is part of it.
Well, I want to dive more into that after we come back, but we're going to take a quick break right now. When we come back, we are going to find out more about Mysten Labs, what Evan Cheng is building on the SWE network, and is it a game changer when it comes to Web3 infrastructure development? Don't go anywhere.
Chinese tech giants like Alibaba are looking to make their mark in the world of Web3. Will they find their partner in Mysten Labs and use the SWE blockchain as their building block? And what makes SWE different from other blockchains? We find out when Word on the Block returns.
If you don't understand the future, you'll never see your place in it. Introducing Forkast Plus, covering all things blockchain, independent reporting, insights, and access from Asia to the world. We cut through the noise where technology, insights, and access meet, where smart conversations happen. Make friends with disruption. Forkast Plus.
Welcome back. We're here with Evan Cheng, founder of Mysten Labs. And Evan, okay, first, your pedigree is very, very interesting. Tell the audience where you came from, what started this journey into blockchain, and finally the vision that you have at Mysten. But you come from pretty interesting pedigree.
Yeah, so I've been in technology for 20 plus years, right? And I spent 10 years at Apple where I built, some substantial technology that's pretty much in every smart device out there today. The focus for my career has always been pushing the technology forward. That's the only thing that's really drive me. In about 2016 is when I started looking into the space, was initially just intrigued. And when I look at the technology and say, wow, promises there, I can see the potential in changing products and changing user interaction model and all that, but the technology really is immature. For a lot of people, the reaction could be, oh, okay, it's not ready. We're just kind of going to step away until it becomes ready, right? Like you're seeing this with AI wave. It takes a while to get to that level of maturity. For me, I've always been more like, well, it's not ready. Who else is going to be doing something about it, right? And that's me, right? I've done this a few times at Apple, then Facebook and Meta. So, ultimately got to 2018. That's the time I had opportunity to either do my own thing, join a startup. But Facebook has also had this ambition to launch what was called the Libra project back then. And I felt like that was a great opportunity for me to do something serious and hire the best talent in the world to contribute to this and learn and where we are, right? So that project was a lot of learning, right? Well, I was, kind of my team built things like the Move programming language, everything related to it. There's some kind of really, really serious technology getting built out there, cryptography, work, a lot of design about the system, the consensus. A lot of those things were built in those 3.5 years where I was leading R&D side of the house. And when the project was now going well, in 2021, late 2021, decided to leave and I finally say, okay, well, I guess, if you have great ideas, you can't wait around for other people to kind of make it into reality. I better come out and build it myself.
You take that really painful experience of watching this technology that you're building and really investing in as a professional, and then watching it all break apart and disintegrate because of policy and politics. How are you bringing all of that to the table now at Mysten? It must feel very similar of an environment that we're in right now, but something that you are more than familiar with over at Diem, as the world really looks, with a lot of hesitation and apprehension at the blockchain industry.
I think some of the people who were previously on the sideline or thinking about maybe I should get into crypto Web3 has decided to take another route, right? Another direction. That's unfortunate. But I think, again, the promise is still there and the excitement is still there. And we're seeing a lot of developer activities. And in fact, we are seeing a lot of more mature developer activities. People have built products that serve tens of thousands, hundreds of thousands, or millions of customers before coming into the space and building products. And that's the exciting part. That fits with what we're trying to do as well, right? They are going to be, more younger, smaller, nimble, more experimental teams out there trying out brand new ideas. And a lot of them will fail. Some of them will be successful. Our foundation will be supporting them. And they're more mature teams say, okay, how do I use this tool, this new infrastructure to solve problems, right? And going back to the ethos of Web3, how do I use that to change the way that, the relationship between consumers, the creators and the consumer, and the platform and the distribution platform and the products, right? So there's a lot of excitement. So there's good, there's obviously a lot of unfortunate downside to sort of the bear market, but then there's a lot of great things that we're seeing as well.
So you're building layer 1 blockchain network SWI. In your words, it's going to make a leap in blockchain functionality. Tell us technically, as best as we can understand, what makes SWI different than what we're seeing in Ethereum?
So the blockchain today is great for tracking the movement of static assets, right? So what we build in SWI, the first principle is each of the object that represent an asset, you track the history of the state changes, right? And you solve the problem of having states on chain, right? In the other blockchains, like EVM model, you interact with a smart contract, you mint NFT. You don't actually fully own the NFT because in the future, even transfer the NFT, you have to interact with a smart contract. On the ownership part, that's the blockchain's industry right now is broken. The other one is when you talk about composability, right? If you don't have the control of the assets, you can't really put things together, right? The smart contract that create the NFT still have full control over it. How do you take data that's inside the smart contract, another data, sets of data inside another smart contract and compose it? It's, using Bored Ape as example, right? If somebody else, another product want to make use of Bored Ape, right? That's, is that even possible, right? When you talk about composability, right? Or if you want to say whether that's two products that from two different company, can they come together and be combined, right? Even if on the product builder want to allow this, right? When your actual data is sitting in a private database, not on chain, and it's really expensive, impossible to update these assets. Do you actually have interoperability? Do you actually have composability? Can you really have a program that sort of replace the centralized, middleman to perform the function autonomously? This comes down to the basically asset ownership model that's just really broken in the blockchains today.
I get it. I mean, I think the Web3 gaming space is about to be transformed. And just a quick pause right there, Evan, because when we return, I want to learn more about that. And also Mysten Labs' ambitious plans. What do you have all planned for Web3 gaming, Evan? We're also going to hear Evan's predictions for 2023. Stay with us.
Experts predict gaming will drive mass adoption to Web3. But what are some glaring problems with their infrastructure? And what will the future of blockchain games look like? More when we come back.
chat with Evan Cheng here, and we got into the rabbit hole a little bit about the technology. I kind of want to get a little bit more about Sui and why developers are using it, how they're using it, and especially your ideas for Web3 gaming.
Yeah, I mean, there are lots of, kind of potential, utilities or things you can try now. You have this sort of shared open database for your asset in gaming, right? Let's focus on gaming, right? Give you an example. Let's say you have a multiplayer world, lots of different players. They all have the same magic sword, right? To start, right? The magic sword that's owned by Angie, a famous game streamer, is the one that's being used to slay that final boss, that dragon. That particular instance of the NFT, the sword, if you want to represent it as NFT, should be worth a ton more than the average Joe Evans, level 1 sword that, might have slayed a couple goblins only. This is a sword level 10, and also the history, what has been accomplished, right? That history is what makes it more valuable. So if you think about it, you understand why a lot of gaming companies are excited about this, right? This is now something that actually has value, and belongs to the end consumer, right? If I have an esports game, I want to publish the results of all the competitions on chain, right? Each of the characters, here's my history of, my participation in this esports game, right? Then all of a sudden the history is much more transparent and it's more trustworthy. That's the whole point of blockchain. You have a lot less concern about cheating, right? So, and yes, you can use for in-game currency, you can use for marketplace, you can do all these sort of things, right? But that's where things get exciting, right? This is open up a possibility of different experimentations, and you open up the possibilities of what if multiple games want to collaborate together, right? That's all the rage these days, right? Go and buy sneakers or even clothing, right? You see Adidas is, sort of like collaboration with, I don't know, Gucci, is it Gucci, right? And things are mixed together. Can you, enable some of these ideas, right? Similar kind of ideas in gaming. And is it only skeuomorphic, right? Like in the early Web3 gaming, where things that's represented on chain are basically sort of like trading cards, they don't change, right? Then you generate a lot of, tokens or using it for in-game currency, or is it much more exciting?
It should be dynamic.
Yeah, it should be something that wasn't possible before. Yeah. That's the whole point, right? When you're doing something different and new, if you're just basically translating what has worked before, you usually don't get that breakthrough, right? It's just like early mobile gaming was not that interesting until Angry Bird came about, right? People are using their finger to flip birds around, right? And people get it right away. This is interesting and can only be done with this media.
But it needs to evolve. It needs to be dynamic, and players want to participate in that kind of organic evolution. Beyond just the game designers themselves. You've said that P2E, play to earn, is not sustainable. How does this blockchain transform the future of the gaming industry? And why don't you think play to earn is sustainable? And where do you see this all going for the Web3 space?
I mean, play to earn was a very interesting experiment, right? How do you reward the gamer that put their sweat and time into the game, right? You reward them in some way. And that's a great experiment. And that general concept isn't wrong. But it's the sort of not sustainable aspect, right? Because the token value is what get people excited, but treat this as a job, right? They're trying to make money. So end up printing more and more of these tokens until it sort of blow up the ecosystem because you print too much money. And you know what happens when you print too much money. Right. So
we're experiencing it right now.
Right. So again, why is that? Right. It's just a blockchain was so limited. Right. It's not much you can do with these blockchains in gaming. That's stateful application doesn't match with a non-stateful, a blockchain. So people are just trying these kind of early, very rudimentary experiments, and we're seeing that, right? The most early Web3 games just basic. Right, or basically Web2 game as some in-game currency and call it Web3, it just doesn't work, right? So we change that, right? Really bring utility, allow utility, right? What do you want to do with it? It's up to the developers, but we remove all those constraints so they can decide what they want to do. And our job is sort of share some ideas and share some examples and see, this is something you can do. This is something that might be interesting to you, right? We built Mysten Labs built a Cappy game to show people what composability really is about. And before we know it, another startup took that and say, okay, if you use our prediction market during the World Cup, and you get it right, you get a little flag that represents the country, and you can then stick that pin to your Cappy. And they did it by following the open specification without involvement whatsoever, right? It's just a trivial thing. But it shows, well, this is what composability is about, right? And this wasn't possible before. And it's completely permissionless, right? We were not involved at all.
Wow. Testnet recently went live, Testnet Wave 2. You're expected to launch mainnet in Q1 of this year. Are you on track?
So Q1, Q2, we are, trying to sort of get the network ready. It's not just the software has to be ready. Operationally has to be ready. We're testing out a lot of the, complicated logic in the tokenomics side, right? Remember one that, interesting features of Sui blockchain is one to provide this elasticity, stability of the gas fee for end user, even if the token is volatile, price is volatile. So a lot of these things are being tested out.
It's no small feat. And to also try to stabilize gas fees while your token is volatile in the marketplace, that is a conundrum indeed. I'm very curious to see how you're going to solve for that. Last question. What do you think 2023 has in store for the blockchain industry?
Well, that's thank you for giving me that softball question. Well, Sui, of course, right? Sui is going to change a lot of things. We took the pain to do something that's really, really different, right? We came out, we say we don't want to do yet another basic things that blockchain that other have done has already been mostly designed, right? We want to see, how we can push that much further and actually solve developer problems. And we believe Sui will be that. So that to us is super exciting. Obviously, we're super excited about a lot of things that's coming in 2023 from our partners.
Are we going to see you raise for a C round?
We don't need to. We definitely have many years of runway. So there's no plan right now. We're fine. So as of now, we don't have any need or consideration for raising another round.
Evan, it was a real pleasure. I have to say, what an interesting world we live in. One thing that is undeniable is that this technology remains one of the most innovative spaces that I've seen, and that includes AI. I think as we evolve this technology journey, all of the technologies will converge, and it's not one or the other. It's it's multi-technology, it's multi-chain, it's a multiverse. So thank you for sharing all of it. Really appreciate it.
Yes. Thank you very much, Angie. Thank you for having me. It's been a pleasure.
Absolutely. The pleasure was all mine. And thank you, everyone, for joining us on this latest episode of Word on the Block. I'm Angie Lau, Forkast Editor-in-Chief. Until the next time.